Hi, everybody. Welcome to the Patti Brennan Show. Whether you have $20 or $20 million, this show is for those of you who want to protect, grow, and use your assets to live your very best lives. Today's episode is part of the ongoing series called Ask Patti Brennan. And, as we are in this period of time, the beginning of 2022, a lot of you are getting your tax returns done. You might be preparing them yourselves, or you may have a CPA. And I think it's really important that whoever is doing your tax return, that you get an extra set of trained eyes. Just reviewing the return, making sure that you're taking advantage of all of the deductions and all of the credits that are available to you. And by the way, I'll share a story. Every once in a while, in reviewing your tax return, you may come across a mistake from time to time. Let's face it, accountants are just like all of us, right? They are human beings, and we are all painfully human. And I can tell you story after story of returns that we have reviewed or taxpayers have reviewed where something might have been missing. Dividends, capital gains, something wasn't taken advantage of, right? And it just helps to take a moment, step back, look at the return. And what I'd like to share with you today are some of the things to look for to make sure that you are paying just the right amount of taxes that you should be and not a dollar more. Fair? Okay. So, number one, if you are one of those people, as most Americans are, that takes the standard deduction, right? So, under the tax law as it stands today, the standard deduction has grown tremendously. And so about 70% of Americans don't itemize anymore because between the deductions that were taken away on those Schedule A deductions, as well as the rise in the standard deduction, most people are just doing the standard, right? By the way, what are itemized deductions? The three major categories are medical expenses, number one, state and local income taxes, as well as real estate taxes, taxes in general, we call that SALT, to a max of $10,000 though, and then charitable contributions. So many people are charitably inclined and you're donating to various causes. Well, if you take the standard deduction, because again, when you do your taxes or when your CPA does your taxes, they're running the numbers to see what's the bigger number, the itemized deductions or the standard deduction. And for most people, the standard deduction is going to be higher. So as a result of that, those charitable contributions that you may have made, it's a wonderful thing. God bless your heart, but you're not getting any tax benefit from them. I will say, though, that you can take a deduction if you're single up to $300, if you're married filing jointly up to $600 above the line. So in that example, in addition to the standard deduction, because that was higher, you also get that charitable deduction as well. So you are getting a benefit from that. If you have dependents, children under the age of 6, there's a child tax credit. Normally, that tax credit is $1,600 if the child's under 6. It is $1,000 for children between the ages of 6 and 17. But last year, guys, it was expanded, and boy, talk about a perk. So you receive a $3,600 child tax credit. You receive a $3,600 tax credit for any child under the age of 6. And $3,000 from the ages of 6 to 17. I have to tell you, that's a big deal. You have to have about $10,000 worth of deductions to equal that tax credit, depending on your tax bracket, of course. So tax credits are a very big deal. Make sure that you got the credit that you are entitled to. Do you have anyone in college? If so, fill out Form 8863 or just make sure your accountant is running those numbers because there's something called the Lifetime Learning Credit as well as the American Opportunity Tax Credit. Again, these are tax credits. They are not deductions. Far more powerful when it comes to saving you money. I think it's also important to determine whether or not you paid alternative minimum tax last year. Now, most people are not subject to AMT, but if you are, you need to be aware of it. And by the way, For those of you who may have been exposed to alternative minimum tax in the year 2020, check out Form 8801 to see if you got proper credit for the AMT and whether or not you're able to use it. Again, another tax credit. Alternative minimum tax is a nasty tax, but you're kind of prepaying the taxes, right? And you do get a credit for that, but the credit is only available to be used against certain types of income. So number one, did you pay it? Number two, do you have a credit? Number three, do you have the right kind of income to use the credit? For those of you who have an income, if you're single, an income over $200,000, for those married and filing joint, if you have income over $250,000, you know about this nasty little sneaky tax called the net investment income tax. That's the 3.8% additional tax that you have to pay on investment income. The really important thing for all of you to know that if you are kind of close to those thresholds is it's kind of a cliff. If you happen to be close to that threshold, let's say that you're single and you have a modified adjusted gross income of $205,000. Let me ask you a question. Is there any way you could lose $5,000 worth of that income? Because if you can lose it, you're not going to be subject to the 3.8% tax. So really important to understand how close you are and whether or not you're going to be subject to that extra hidden additional tax. Otherwise, you're writing a check on April 15th. Last but not least, you've heard me say it before, IRAs, IRAs, IRAs. It doesn't sound like a big deal, $6,000 if you're under the age of 50 or $7,000 if you want to take advantage of the catch-up contribution. It doesn't sound like much. It's a big deal. Just ask my kids. They did Roth IRAs with their summer money from their summer jobs. And I have to tell you, even I, as a financial planner, am shocked at what these balances have accrued. And that continues to grow tax-free for the rest of their working life and for their retirement. It's never too late to start an IRA. You need wages in order to set it up, and it's a great opportunity to teach your kids about money. So those are just a few of the ideas to consider when you're reviewing your tax return. If you have questions, go to our website at keyfinancialinc.com. Send us a message. We'll be happy to review your tax return with you so that you can be better prepared, not just this year, but every year, to make sure you're not paying more tax than you have to. I'm Patti Brennan, Key Financial Wealth Management with wisdom and care. Have a great day.